The top three shareholders of AIIB are China, India, and Russia. They are all developing economies, and their developmental experiences are crucial to helping other developing nations. The IMF and the World Bank are kind of tainted by the Washington consensus mindset. And to this day, they continue to have developed nations as their top shareholders, which is very unlike the AIIB, which has 70% of its shareholders from the developing nations. Obviously, the World Bank and IMF are not conducive to a better understanding of developing economies in Eurasia.
And what about the the emerging economies? It is important for them, but I mean, what will we be seeing in various regions in the future?
Well, let me get back to the AIIB, the points I was trying to make. I think AIIB's strongest selling point is that it advocates for a new kind of development mindset, kind of a new way of getting things done. The AIIB motto is being lean, clean, and green, kind of cutting through the red tape. And it will also adopt world-class environmental safeguards. I mean, that has been a concern. So it's, following governance standard, international governance standards in that regard. And contrast this to the Bretton Woods institutions, which often pursue agendas that are, emphasizing ideological interests that don't really take conditions at the ground level into account, right? They don't really take into account developing nations' needs. And these two strengths that I have just mentioned here are validated by AIIB's report card. As you said earlier, they just approved 4 loans totaling $509 million. And this institution is already 57 nations strong, and it's seeing a surge of applicants from Africa and Latin America as well. And its current staff of 50 will double by the end of this year. And by the end of 2018, it will be fully staffed with approximately 500 people. And all of this for a startup that, just started at the beginning of this year. Not bad at all.
Britain joined fairly quickly, I believe, but there were 1 or 2 players that are either not on board or didn't join. I think Japan was one of them. What about Australia, South Korea?
With regard to the U.S., the AIIB president has made it clear on numerous occasions that it wanted the U.S. to join and that they would be most welcome to join. And the Obama administration has kind of softened its tone a bit because the almost unanimous condemnation from the American opinion leaders for not joining AIIB last year. And so this is a true kind of rarity given the highly partisan political environment inside the Beltway these days. But with regard to the U.S. joining the AIIB, I'm not really holding my breath there either. Given that the U.S. Congress kind of still demonstrates very little desire to truly reform the IMF and the World Bank. So why would the U.S. officials bother with, AIIB, the new kid on the block? Anyway, Washington is simply too absorbed with other priorities right now, so I don't see how either Hillary or Trump administration would change that issue. And, all the parties involved can benefit if the U.S. joins the AIIB. The development institutes, and especially Beijing, have emphasized the transparent nature of how AIIB would engage international private institutions to bid on developmental projects. It would certainly be good business to American partners that can successfully kind of demonstrate their capabilities to participate in this historic revival of the Eurasian continent. And it's really exciting. This is going to be a multi-generational project of our time. And, given that people complain about the sorry state of infrastructure in America these days, AIIB can also help in that respect.
Rebecca, of course, we can't but mention what's happened in Britain now with people there wanting to leave the European Union. Of course, we've all seen that this has affected the Asian markets. Would this affect anything to do with the AIIB now?
From what I can gather, Asia has been relatively shielded, compared to Europe and the American markets. I guess what concerns Asian policymakers right now is that most of the developing countries are still very much export dependent. So what happens to the European Union, of course, has a big impact in that respect. The onus would be on kind of Asian capitals could continue kind of pressing ahead with domestic reforms and to make industries and financial markets more resilient to external shocks like Brexit. And also, the steps kind of, coincide with what's happening with all the infrastructure building through AIIB. That would certainly help in terms of boosting Asian domestic consumption and building its own domestic market.
Just one more thing. To what extent will the AIIB reflect the deeper trends when it comes to the global economy as a whole?
It's kind of clear that the old days of China recycling the U.S. dollar that it earned through exports into U.S. treasuries are over. We have like $3 trillion worth of U.S. treasuries. So Beijing is determined to internationalize the renminbi. And, also with the growing cracks in the U.S. dollar-denominated global financial architecture, the One Belt, One Road initiative that aims to chart a new historical development course in the Eurasian heartland is a much, much better way to invest this foreign reserve. So in a way, China helped found the AIIB with, these considerations in mind. And the AIIB is also a clear sign of the ongoing shift of the global balance of economic power eastward to Asia and then kind of the Asian heartland. China is currently Asia's largest economy and, it's set to surpass the U.S. to be the largest. So it's made clear that it cannot revive the Eurasian continent on its own. And that's, why through the AIIB to bring in all the partners to help build the infrastructure to connect Europe to China and then all the heartland in between. So through AIIB, China hopes to achieve win-win for all nations.